Welcome back to the Bitcoin Treasuries podcast. I'm Tim Kotzman. I'm here with Malcolm Pally and James Van Straten of Coincilium Group and Forza. Gentlemen, thanks for joining us today.
Thank you very much, Tim.
Thank you for having us, Tim. Really appreciate it.
Absolutely. Could we start out with where everything is right now and maybe specifically walking through the differences and relationship between the Coincilium Group and Forza?
Sure, absolutely. So just to kick it off, Coincilium did a fundraise last week, which was to raise funds to dedicate and put into Forza to buy its first chunk of Bitcoin. And we did that. We announced that on Friday. It was a combination of a placing, private placing, mostly institutional, but also we had an amount that was 250,000, which was put in through a retail offer through Winterflood, which is a unique kind of proposition in London. That's the way London differentiates itself, certainly in the small cap space. So we've announced that we're going to kick off Forza with 15 Bitcoin. That's the start. That's to kick it off from this funding. And we're going to be looking at growing that treasury in Forza pretty aggressively going forward. So there's lots of ways we're exploring doing it, and we're going to talk about that as perhaps a little bit later in the interview. But the key to this perhaps is to kind of give people a little bit of clarity of where Forza sits within Coincilium, and also how James's role particularly sits within Forza particularly. There's perhaps a little bit of confusion in the market between the two, because every crypto Bitcoin treasury proposition, because they're all popping up with different models, are going to be different, and it's an evolving space, an emerging space. Forza was born out of a strategy of Coincilium, because you should consider Coincilium as like a venture capitalist, a VC, an investor, and also a venture builder. And this is a particular venture that we've launched, and the intention is to, at some point in the future, certainly once we've fed it with or seeded it, to actually give it a life of its own. So, but that's a process, and that's something, we've only literally just come out of the traps on Friday. So, the funding is just started, the first lot of funding, but for the interim and certainly the beginning, all the funding for Forza will come through Coincilium issuing its own shares and feeding into Forza. But we want to distinguish between the two, because Coincilium's got a lot of activities that probably are not really relevant to those who are particularly interested in Forza. They want to see how much Bitcoin Forza is going to buy. And Forza's strategy, as you know, is also to accumulate Bitcoin, but also use other methods and methods to actually enhance yields in order to buy more Bitcoin. So that's its differentiator.
James, do you want to expand a little bit on your role at Forza, if I have that right?
Yeah. So being in this space and looking at the markets, and especially through the Bitcoin Treasury Company lens of almost 4.5, 5 years, the market in the UK, and especially like in Japan, is starved of sufficient yield. So for a Bitcoin Treasury company, just made sense. The UK has its nuances and it has its regulations, which Malcolm go into specific details on. But we're seeing these metrics, such as obviously Bitcoin per share, days to cover for MNAV, and we're seeing the success of Metaplanet and the European blockchain company as well. So essentially, they've laid the foundations of success. So it's also like you don't need to change anything. We're seeing Metaplanet hit like daily limits on the exchange, setting records, and Dylan Leclerc has done such an unbelievable job, and he's just been amazing just to look at and kind of emulate. And as Saylor said at the strategy conference, we're all in it together, and everyone buying increases the price together. So yeah, it's going to be accumulate as much Bitcoin as we can in the most risk-adjusted way. We do have a nuance in terms of generating yield. So instead of just having the Bitcoin on the balance sheet, we can look to expand it. But as Malcolm said, we'll be looking at retail offerings and continuing to accumulate Bitcoin. There are other methods that we can see in the UK market, but the UK market is very limited. There isn't an options market. There is a bond market on the Aquis exchange. So look, we look at all possibilities, and with Forza being a separate entity to CoinCilium, it gives full optionality. So there is no real control. It can, as Michael said, have a life of its own, and I think that's really important. So the more optionality, and that's exactly with Michael Saylor's Bitcoin on his balance sheet. It's 550,000 Bitcoin that's unencumbered. So people speculate, will Strategy be a bank? It doesn't matter. It's the optionality that gives, and that's what Forza gives us.
I'd also like to emphasize how early stage this is, because there's very few propositions that are actually available for UK investors. And we've seen the enormous appetite because the regulator, the FCA, in its wisdom in 2021, imposed a ban on retail investors having exposure to Bitcoin. Any cryptocurrency for that matter, or any product that references cryptocurrencies. So ETFs were immediately pulled, and more recently they were reintroduced, but for institutional investors only. And the rationale for that is quite interesting because the regulator imposes these things. It has to explain why it's done so. And we're looking at these kind of rationale, and they really, in my opinion, personal opinion, are kind of don't make as much sense as they perhaps did at the time when they were introduced. So one of the talking points that we're going to do a Twitter space on Friday, and I think we want to cover this because there was a perception that retail investors don't really have an understanding of cryptocurrencies or Bitcoin, and they don't understand the risks. Now, that's going to sort of fly back. It certainly has now, because from what we've seen, they've got more of an understanding of the risk and the potential than many institutions have, because institutions are very slow in the UK, certainly, to expose themselves to this opportunity. And by the time they come along, I think, or when I say come along, we've had some initial conversations. We've had some that actually understand the space and see the potential of a proposition in the UK market that can actually navigate its way through the landscape. And then there's institutions who want to talk to us. They see what's going on. I don't think they're in denial anymore. They certainly were for a long time, but they kind of can't get their heads around it because, as anyone knows, I've been in this space for 10 years. My first Bitcoin I bought for $400. No one can call me anything but a maxi. I do have had exposure to other coins, but not with the same approach, because Bitcoin is money. Other tokens, coins have other characteristics to them, but they're not money. And the point I just wanted to get back to was that that a lot of these institutions kind of recognize they're going to have to do something, but they're kind of a little bit frozen in the headlights. They're coming round, they are, and with just such few options, we think we're in an amazing space right now. I'm going to say, before I hand over to James, I think, I also say this is a marathon, not a sprint, but it's a marathon run at the pace of a sprint. So we've really got to be fast with this, and we've really got to be aggressive with this. So we're exploring all avenues. Our first foray is going to be with the funds we've just raised, and James is on my back all the time to ensure that our interests are aligned. And I can assure you and your viewers that they are. We want to get this going as quickly as possible. So anyway, sorry, over to you, James.
Yeah, no, the UK market is, as I said, it's very limited. But even on the fundraise that we did on Friday, and the numbers in the UK are a lot smaller than the US, but for the UK, these are still quite big numbers. And then on Friday, so from Friday to today, I've had quite a lot of institutional interest. And then today specifically, we had a UK inflation print which went to 15-month highs. It just shocked pretty much everyone in the market, and our gilt yields just soared, like pretty much everywhere, US, Japan, but specifically in the UK from that inflation print. And the messages are like, all right, I'm now ready to listen to you, where I should have probably listened a while ago. And these are big players that have large pools of capital. So I think it's coming around now. Bitcoin's just hit its all-time high, and I think I think it's now become a normalized asset. And it's just we're so early, and like Malcolm said, it does take time, but I think it's here, and you can see by the amount of flows that we're seeing into all these Bitcoin treasury companies on the Nasdaq, on the Canadian Stock Exchange in Japan. This is a global phenomenon now. Um, so I think the next 12 to 18 months are going to be insane. And then it's all about the portfolio allocation. So when I'm speaking to them, I would have assumed it was a 1% allocation, like just to dip your toe in. It's now becoming like a 3 to 5% allocation minimum. And yeah, like I was in consensus last week and I was so busy. One, from just embargoes, that there's the announcements that are coming out. One is just insane, but two, the people that want to get in want to get access to the UK market specifically, because one of, as Malcolm said, the ETF ban. But there's just no Bitcoin exposure here. There's like a zero. I think there's one pension fund in the UK that Cartwright, who's a pension trust company, managed to kind of orange pill, and they put like 3% of their AUM in, which maybe was a couple of 100 million, but that's it. So like we're still probably one of the largest financial markets in the world, the center of the metals market. So there is just trillions waiting. So you've just got to set yourself up and position yourself as a suitable Bitcoin treasury company that will just take huge amounts of flows.
So yeah, I mean that's absolutely spot on. I think there's a wall of money out there that is actually sort of prepping itself. I think one of the other differentiators, which we're going to start talking about a bit more, is what you need to do to actually appeal to institutional investors, because there are things that they need that to satisfy them on a compliance, governance, security, custodianship, all these things they're going to ask you. And, they're probably not that well understood in retail, and the retail market is how you have to ensure that your custody of your Bitcoin is done in a way that is absolutely risk-free. And as a public company, for instance, Coincilium, Forza comes under Coincilium as far as the governance is concerned. So we need to ensure that our custodians are insured, are regulated, are fit for purpose, and they have got the substance to actually give us the comfort that the security is there. And we can't afford to keep Bitcoin on an exchange. And that's one of the things that is perhaps not being asked, about of us, but we know kind of naturally what we need to do. I mean, just as a simple thing, if anything happened to myself or Eddie Traviar, our CEO, and we had a wallet in our drawer at home, that's our shareholders' funds. So we can't afford to actually take any chances. And what we're building with Forza as well is everything with an eye to actually what it is that is going to be required from institutional investors. Doesn't mean we're ruling out retail. It's only a benefit for them because, retail have supported us and retail understand the propositions. They've got more questions and more serious questions than anyone at the moment we're getting from institutions. But the fact of the matter is, when it comes to the all the compliance issues and all the things that then the boxes they're going to need ticked, we want to make sure that Forza is fit for purpose from an institutional point of view. Because when as I mentioned before, the regulators in the UK, the FCA, is kind of painting themselves into a corner with this, but that's not maybe that's a bit harsh, but they've, I don't think they did it for the wrong reasons. But the fact of the matter is, maybe they didn't even imagine what was going to go on in the States and how this wave is going to erupt. So we've got to be fair to them because they actually do these things for the right reasons. But just assuming that there's going to be some change in the structure. So in order to actually prepare for that, where perhaps regulations change and then they're going to look at the potential for, rather than having to sort of have other angles going on as well in order to actually provide that proposition to investors, they're going to look at what you need to do to actually be suitable. And I believe that from an institutional point of view, one of those things is going to be reporting. It's going to be custodianship. It's going to be ensuring that all these things, if you're saying, okay, investors trust us with your funds, we will go out and buy Bitcoin and we will hold that Bitcoin. At the moment, there's no specific prescribed way for that Bitcoin to be held. So, anyone could do anything. Well, we're already, as I mentioned before, we're making sure that whatever we're doing about our custody and our governance is compliant, and it's going to be institutional grade. So that, as I say, is one of the things we're sort of seeing down the line, because I do think the landscape will change, but it's just about how it's done in such a way that is kind of gives the regulator the comfort to know that as far as consumer protection is concerned, they've done their part.
Yeah, I just had two more things just to add on. It's so when I'm speaking with the institutions, they're very nervous. All they're right to be is, what's the downside risk? Because they don't want to look like a fool. So when I joined Coincilium, I also had like same concerns and stuff like that. But I've then got to think about, okay, so again, it's like the MNAV premium. It's so like what Michael Saylor put in his earnings report. He did a whole list of the reasons for an MNAV premium. And one of the biggest reasons that I joined Coincilium and then to set up Forza was the fact that I don't give Malcolm much credit, but the credit that I do give him is they listed Coincilium in 2015, so that's 10 years ago. And if you think about from 2015 to 10 years, that's what, three bear markets. I think you could count probably how many companies in the crypto space has actually survived 10 years. So when I literally said to the institution, this is how they've navigated three bear markets, this is how they hedge downside risk, this is the liquidity that they've generated, this is the amount of shares traded over this time, it gives the institution a huge amount of comfort. So you're seeing a lot of companies start now, either like a reverse merger, SPACs, IPOs, and you're seeing a huge price appreciation on the launch, and then a huge downside price action. And obviously that makes the investors nervous. So having that huge long track record is so paramount to having the connections with the institutions. And the other thing is, it doesn't actually matter. I think we've learned now what the underlying business is that generates the revenue in order to fund the Bitcoin. So you look at Metaplanet, I think it's one singular hotel. And I think they've just broken all kind of records. And MicroStrategy, essentially a slightly free cash flowing AI and software and dev business. So yeah, it's incredible to see any business pretty much failing or just having some free cash flow. You then generate a huge amount of buzz with a Bitcoin treasury strategy, executing it correctly, and it's just amazing to see this happen globally.
Yeah, and I'd add that we're sort of grateful that James took a chance on us, and we want to make sure that we do pretty much everything that is in line with kind of his view, because he's got a you know, a very, very good perspective and vantage point to see actually what's coming down the line, what's happening. This is a whole new space. And the difference, there's different nuances. We talk about most of the action happening in the US, and what we're seeing in the UK is, as I say, quite extraordinary. The volumes we've started to see on our exchange, particularly with our shares. We haven't had the action yet. I believe that's going to come once the placing shares wash through. That's the indications we're getting from the brokers and from the market that it's give it time to settle after a placing. And also the mechanisms that you have here for raising further funds to buy more Bitcoin in a way that's, as Michael Saylor's term was, accretive dilution. So you want it to be actually something that investors want and look forward to and want you to do, which is counterintuitive to small caps anyway, usually. But I believe that.
Sorry, it's
Sorry?
counterintuitive. Sorry, it's counterintuitive to TradFi.
Yes.
TradFi can't get their heads around the whole accretive dilution. And trying to explain it to people is just it's just
Yeah.
incredible. Just
Yeah.
sorry to
Because
say that.
it's habit forming, because usually small cap companies go back to the market. They need funds, they need it for working capital, they need it for whatever reason, and there's a execution risk involved in every time you raise money. There's an execute Is that money going to be deployed into a venture that is actually going to be worth the dilution? And we all have it. We all have execution risk. But when you think about it, if that money, those funds are being deployed into buying Bitcoin, you're already satisfied about where that's going. So it kind of, that accretive dilution is a game changer. It changes the mold, and it's very hard to get traditional investors to understand that concept, because it's so deep rooted within the psyche. And it's, even for me, as sort of being a veteran of the small cap space, I know that I want to raise more money to buy Bitcoin, and I want to do it at the right price. But I'm not holding out to as much that ethos as much as I would do if it was a kind of more to sort of for further investments, or for ongoing, keeping, the working capital, because that the more you deploy a finite asset, it's gonna it's as long as you've got the confidence that it's a finite asset and it's going to appreciate, then everything else takes care of itself. The one thing I was going to say as well is that I believe that as the UK evolves, and we're pre kind of this new landscape, which we're only speculating about, but we're expecting to see at some point. I believe that the products that are going to be available for funding are going to have to expand as well. So I don't know what they'll look like. As we said, we don't see options that much, but there's no reason why, if there's the demand's not there, there's level of sophistication in London is there to create it. And so I think we can see ancillary opportunities in the industry, just getting those brokers and all those people in TradFi to understand that this is an area where they can actually do really well, providing that they get their heads around it. And we're also identifying a few brokers in the space. We announced as well a new broker that we've taken on to help, which very helpful with this fundraise, with sort of Oak Securities, who are very keen to actually understand and explore this space, and they've been very supportive. And one of the few people from there who actually has a good understanding of the space. So there's a lot of education to be done. And that's, again, perhaps James, you can touch on that. That's another thing we also want to do with Forza as well. We want to, I mean, we're doing a Twitter space, which is, pretty straightforward. But I think that there's an opportunity to do a little bit more investor outreach to help people understand more about our model, about what the potential of is in the UK in this emerging space.
Tim, it may sound insane, but we're pretty much probably around October 2020 of MicroStrategy in the US, but in the UK. Like you won't understand it because you're not in the UK, but that's how early we are.
Mm.
Um, And to understand it, like I went down the road, I met one of my friends, and they had Bitcoin exposure who I hadn't seen for a while, and they had it all stuck in MicroStrategy because that's the only kind of um, main Bitcoin exposure they could get. And now obviously we're seeing MicroStrategy where the returns may not be as good as the other smaller players. But again, for example, we can't buy MetaPlanet as the Japanese stock or even OTC on any of the other brokers as well. So you can then imagine how starved for actual Bitcoin exposure there is in the UK. So yeah, we want to be the pioneers in that. I think the advantage that we also have is the education and the technical nous that we've been in this industry for such a long time. So it's not just creating value for the shareholders, but it's the education that comes with it. And we know, look, I think retail are 10 times smarter than the institutions. And I think the institutions are quite humble now. They're like, I want to learn and I want to get into this space. Just last week, I was speaking to one of the institutions who deal with all the crypto companies, their ATMs, their convertible notes, and these crypto companies are way smaller. So they deal with the strategy ATMs, convertible notes, the miners, and what MicroStrategy is about 80 billion market cap. The miners are about 14 billion market cap together, and they deal with hundreds of billions of US listed companies. And they go, our attention is just with the crypto companies. Way more fun, way more interesting. The vol on the stocks is greater for our upside. Like the ATMs on they couldn't believe the ATMs on strategy, the 21 billion and then another 21 billion. They're like, I've never seen these. They literally go like, I've never seen these numbers on an ATM before. ATMs weren't even a thing. This is like repricing capital markets, and it's Saylor who we owe so much gratitude to, just to pave the way for everyone.
Bitcoin custody is evolving, and Onramp leads this change with multi-institution custody, eliminating single points of failure. Instead of one institution or complex private keys, Onramp secures your Bitcoin in a segregated, cold storage, multi-sig vault backed by 3 independent, institutional-grade custodians. No single custodian can move funds by themselves, providing an unprecedented level of security that traditional custody solutions simply can't match. Protected by a $100 million Lloyd's of London insurance policy, all transactions are fully auditable on-chain, never rehypothecated, and executed only at your explicit direction. This means complete transparency and control over your assets at all times. Beyond custody, Onramp delivers comprehensive Bitcoin financial services, including lending, trading, inheritance planning, IRAs, and more. Onramp functions as your private banking partner, coordinating key holder activity, removing technical burdens, and providing a personalized, trust-minimized experience tailored to your specific wealth preservation goals. Whether you're new to Bitcoin or an experienced holder, Onramp's approach helps secure generational wealth with unmatched security and peace of mind. Visit onrampbitcoin.com today to learn more, sign up, or book a free consultation with their team of Bitcoin custody experts. Are you looking for comprehensive analytics on corporate Bitcoin adoption? Strategy Tracker delivers real-time insights into how companies are executing their Bitcoin strategies completely free. Monitor NAV premiums, cost basis performance, and track how corporate Bitcoin treasuries perform against the market. Upgrade to premium for just $3.99 a month and unlock exclusive benefits like detailed market rankings, real-time trading volume analysis, and advanced performance metrics for corporations embracing Bitcoin. Apply code KOTZ at checkout for 100% off your first month of premium. Strategy Tracker is your essential tool for measuring the effectiveness of corporate Bitcoin strategies. Visit strategytracker.com and gain the analytical edge in understanding the Bitcoin Treasury phenomenon. Join us May 27th through the 29th for Bitcoin 2025 in Las Vegas. Use code KOTZ for 10% off tickets. James, you mentioned a little bit earlier about the amount of inbound over the past few days. Do you think, I was going to ask earlier, and of course you touched on it a little bit, was there an increased amount of inbound after you announced your first purchase? And how do you think that kind of message hits the market, just from, again, probably less than the past week, as far as inbound and conversations, and also Malcolm, of course.
No, just to be clear, we actually have announced what we're going to purchase.
Okay.
But when we did the raise, it takes a few days for the funds to land. So once the funds land, we're going to make the purchase. So I think we've indicated that, but I think on reflection, I think the market needs to see the purchase, the price, the quantity is actually sort of done, and then I think it will probably take heart from that. But the volume certainly kicked in. So,
Yeah.
James, you want to talk about that? I just wanted to clarify that point.
Yeah, a few things that I've noticed. One, just on my announcement as being an advisor to the company, the stock moved 55% or something. So that to me was like, okay, there's clearly demand for a nutcase in Bitcoin that can get some exposure. And then we had 24 million shares traded on Friday, I believe, which was the most, I think the most amount of shares traded on the Aquis exchange. I was going through the history, and I think it was that. And then, but what Michael Saylor says is Bitcoin makes your stock interesting and relevant. And that's exactly what it does. It brings the speculators in, it gets the people that want to buy it, sell it, short it. So the volume's gone through the roof, and now again the engagement on Twitter starts to grow. You get the media coverage. Again, the people that love it, hate it, interested in what the capacity could be. So yeah, it's so early on, but again, you go on the street here. I think 9 out of 10, if not mostly 10 out of 10 people will be like, I don't even know what Bitcoin is. Well, to be fair, I was sitting on a flight home from Toronto last week, and the guy next to me, quite a wealthy guy we were speaking, he's never even heard of Nvidia before. So for him to not have heard of Nvidia, there was zero chance of him even hearing of Bitcoin from London. So yeah, that's where we are, and that's why I kind of referenced we're kind of in August 2020. So the UK we're in a very unique position because of the ETF ban, the retail staff for Bitcoin exposure, and the fact that all the activity is really happening offshore, and none of it's really happening in the UK. And we've now seen that the exchange that we're on, which is the third tier exchange essentially, can handle the volume and liquidity, which has pretty much shocked the brokers that we've spoken to. I think it's shocked Malcolm, who's been on the exchange for 7 years. So Bitcoin just breaks records wherever it is, and that's why it's all guns blazing, trying to be creative and trying to find new and novel ways to buy as much Bitcoin as possible.
As I say, I think that they'll emerge, and at the moment we're just cracking on with it. After the placing and the fundraising, it'll take a little while for the share price to settle and gather a level. Still trading materially above the placing price, but I think we want to start seeing the traction coming in soon. And awareness is a big part of it. Also, investor understanding. I recognize. I think that model we've actually launch Forza with perhaps needed more explanation, and we'll be doing that just to make it clear that, as I said, the trajectory of Forza, if it takes on a life of its own, which we're working towards, then we'll give it a life of its own. But at the moment, think of the Coincilium shareholders as part of the VC that is actually launching Forza, and its current market cap for the entire company of Coincilium's 10 million, and we're putting a chunk into Forza. We'll put even more as we build aggressively, and then that can have a life of its own. It's going to be a material return. So, but anyway, we have optionality at this stage, and it's the best place to be because I don't think the news flow will stop, not just with us, but with the market, and generally attention. Once Bitcoin goes through an all-time high, then all of a sudden the mainstream media picks up on it. People remember, oh yes, I remember that. Why hasn't it died? I thought it died 4 years ago, and that will come back. And then I did an interview in 2017, just when Jamie Dimon, it was on BBC Newsnight. Jamie Dimon said Bitcoin's a fraud and China banned mining, and I had to sit there and defend Bitcoin. I was brought there as the sacrificial lamb because of the guy from the FT who already had his agenda and his mind made up. It wasn't easy, but and I didn't come out of it feeling like I'd won, because they'd already decided what they thought beforehand. But I've no doubt that once we get to new all-time highs, they'll try it again. Maybe not Newsnight, maybe it will be, whatever it will be. There'll be, the media will come and they'll bash it, and they'll, and eventually we win. That's the Gandhi proverb. But yeah, and we're at that point. I think James is using the analogy with MicroStrategy. I'd use the analogy with the dot-com boom. We're still in the early stages of this being built out. There's a lot of infrastructure. Trading is the biggest use case for any kind of crypto, and for Bitcoin, the ability to buy, sell, trade, that whole landscape of the rails is going to be evolving as well. So there's a whole industry around this, custodians, that's going to emerge. And obviously, once the banks are permitted to custody Bitcoin, then they're going to use the rails probably more efficiently than the banking system we're using now. So it's a whole new world coming, and it's great to be at this stage in it, and it's so early on. And also, great to actually see the shareholders actually getting it as well, and getting the opportunity, simply because the institutional investors and those perceived to be higher up the food chain don't really have the confidence yet, or it'll take a while. But when they come in, it's going to go gangbusters.
Yeah, and to your point, I mean, Jamie Dimon was in front of the camera in the U.S. this week saying, "Hey, if people want to buy Bitcoin at my bank, they can do it. I will defend your right to smoke cigarettes." So, I mean, this is just,
He can't hack it.
a continuation of the news cycle. This episode is brought to you by Arch Lending, the premier provider of crypto-backed loans designed for both individual and institutional investors. At Arch, your digital assets work for you without selling them. Arch offers flexible loan options tailored to your needs. Backed by industry leaders like Morgan Creek Digital, Castle Island Ventures, and Galaxy Ventures, Arch Lending is setting a new standard in crypto-backed lending. Are you ready to unlock the potential of your crypto assets? Visit archlending.com to learn more and configure your loan today.
Europe's richest Bitcoin heritage site, Prague. BTC Prague, the biggest Bitcoin conference on the continent.
Join us June 19th through the 21st for Bitcoin Prague 2025. Use code KOTSMAN when you buy your ticket at btcprague.com. Hey guys, today's episode is brought to you by Stampseed. If you're in cold storage, you know how important it is to protect your seed phrase. That's why I recommend you head over to stampseed.com and check it out for yourself. This seed phrase storage device is one solid piece of titanium. There are no loose pieces, and you can hammer your seed phrase in letter by letter. When you go to stampseed.com, use promo code TIM15 for a 15% discount across the website. That's TIM15. Can you guys hit again on the restrictions on ETFs over there and as well just the amount of coverage and type of coverage that you see in the traditional media. Because I guess globally, right, we're all kind of part of the social media if we're on Twitter or X or LinkedIn or wherever. But yeah, is there less traditional media coverage of Bitcoin in the UK versus what you might see here, or is it the same? Is it like negative sentiment more so than you might see over here, or maybe it's neutral to, always controversial, right? Because you have to make television, but maybe more neutral to positive, especially when you're hitting an all-time high today. But yeah, can you speak to that a little bit, along with just the regulatory framework in the markets?
Yeah, I'll touch on the ETFs and the regulatory side, and James, perhaps you can talk about the media. But essentially, ETFs are problematic anyway for retail investors, not just from the regulator point of view, but a lot of brokers, their compliance departments impose quite stringent checks on how they classify different types of investors. So, to qualify as a professional investor, which is what you'd need to be in order to trade certainly crypto referencing ETFs, and often other referencing ETFs. I've at one time was exploring leverage gold ETFs, and those apparently are only for professional investors. So they're quite sensitive. But the bottom line is that you have to qualify, or you have to demonstrate that you're a professional investor to your broker before they'll allow you to trade a ETF. And I'm not even sure, maybe James can comment on the products that are available in the UK on that side. But the criteria for qualifying is interesting, because it's a lot of the criteria is down to how many trades you do. And that, I don't believe, is a
They should see my history of trades.
Yeah, well, maybe you do a lot more, but I used to do very infrequent trades. I don't trade too much these days because I'm too busy running Coincilium and Forza. But the bottom line is that my trading strategy wasn't exactly buy and hold, but I wasn't an active trader. But I did consider myself experienced and professional, in the sense that I was doing it at one time for a living. But what I would buy and what I would get involved in wouldn't necessarily be a quantity of trades per month or whatever. Plus, you had to have a certain net worth that you can demonstrate free of your property. And there are other sort of aspects. And once you can satisfy your broker that you meet that criteria, some brokers let you self-certify. Some brokers, perhaps those higher up the food chain, need to see that demonstrated, because their compliance is all over making sure they can sleep at night. But so it's nothing like the US in terms of actually the although I don't know specifically what it's like, but I assume that there's a more enterprise kind of culture where, people, if they can make a decision and that decision goes wrong, they take it on the chin. In the UK, the regulator and the compliance people in brokerages, they want to make sure that they don't get into trouble by offering the wrong products to the wrong profile of customer. So that's the regulatory side. Again, as I said, I do believe that there will be some changes on with crypto, because it's just too big an opportunity to ignore. But I still think there'll be some restrictions, but it just depends on how it opens up. Media.
Well, it was just on that. I know people personally that had probably £4 million, like millions of pounds in their SIPs, that had Bitcoin ETPs, the exchange traded products, and then like half in gilts. And then I think it was in January 22, the FCA said, like, we're forcing you out. It was literally like a forced move. So they had no other option if you were in an ETP. Well, I was 100% in MicroStrategy, but these guys would just have to move over to MicroStrategy. So when you see it, then the premium, and I was with Michael Saylor at the conference, and I asked him this. I was like, how much do you think of the clampdown on the FCA actually coincided with your premium? He said not a lot, I think maybe there is a slight premium because of the FCA, and I know millions of pounds that are stuck in MicroStrategy because of this ban. Look, we don't know if the ETFs launch here that there would be a move straight there, but there was definitely a clampdown that coincided with the premium. I think the document was actually published in like March 21, and then implementation was like in 2022 as well, during the bear market, which was a perfect time. So yeah, you're going to assume that they're going to be more, they can only be more relaxed about the rules. They can't be more aggressive. So that's only tailwinds for us. So yeah, I'm extremely positive to be in this space right now. But in terms of the media, I saw the Financial Times interview with Saylor talking about my teeth are scarce. Like, so why are they not worth a fortune? But we also have the British Broadcasting Service of the BBC, that's funded by the taxpayers, and they'll put out a hit piece on Bitcoin, and especially Bitcoin mining. Usually once a month, there'll be a Bitcoin is boiling the oceans, or Bitcoin is bad, or Bitcoin is negative in some way. So yeah, it's similar media. And yeah, I don't know if you know as well, when Keir Starmer came in charge in the last 6 to 9 months, if you literally were outspoken on social media in a negative way, like people were put in prison. I actually know of 2 people that were put in prison just for like negative slandering comments about government or anything like that. So look, they are harsh on a multitude of ways. So you can only assume moving forward they're going to have to be more relaxed. The economy is in dire straits, so they talk about digital assets and growth and all of this stuff, and they don't really know what they're talking about. And you're looking at the industry, and you've got the biggest growth asset of all time, and it's staring them in the face. So yeah. Then the other question that all the UK citizens also say is that the government or the Treasury holds 61,000 Bitcoin that we confiscated. I think we're like the third largest buyer of any sovereign nation behind US and China. And there was a Bloomberg ran an article about we had like a couple billion pound black hole at the time when Labour got in. And the talks were that they were going to sell the Bitcoin, a bit like Germany. But Germany obviously had that nuanced case where it was a state that seized it, so they were a forced seller, and they were a forced seller like $50,000. So considering that the UK have held on to this Bitcoin for so long, they may not be a forced seller. But like one of my friends, Freddie New, who runs Bitcoin policy in the UK, he's actively talking, or he's trying to talk to the Treasury or any of the MPs to try and find out who holds the keys, or where is this Bitcoin being held. So yeah, to even know the visibility on these 61,000 Bitcoin is still a myth. So yeah, that's the opaqueness that we have in the UK.
Well, happy all-time high day for Bitcoin, right? I think that needs to be said. And I guess I'll just throw it over to both of you for final thoughts, closing thoughts, and where can we find you individually and the firm online?
Sure. So, well, from our side, we launched Forza into the onto the effectively the funding launch Forza on Friday. We're in the process of setting up a website. Watch this space. It's going to be a little while because we want to make sure it's fit for purpose, and it's going to have a lot of material resource in it. We're setting up a Twitter account or X account, which hopefully will be up and running by next week. But in the interim, I'm available at Malcolm Pally at coincilium.com. James is on X all the time. He's responsive, and I'm sure you'll find him there, and he'll tell you the best way to get him. But I would also keep an eye on our stock, which is traded in the UK under ticker symbol COIN, same as Coinbase, but in the UK, and also in the US on the OTC market under it's an OTCQB listed foreign stock, so it's under CINGF. So you can see us there. Our website is coincilium.com, but watch this space for the Forza website, which will be hopefully live. I can't give you a date yet, and we are kind of scrambling, but we want it to be right. So in the interim, hopefully our X account will be the conduit until the website's ready, and there'll be other things we'll be doing as well. Hopefully more interviews with you, Tim. Thank you very much for the time, and we'll also be looking at ramping up the education, hopefully the events and some of the X spaces as well.
Yeah, my closing thoughts are just, I just want to be a pioneer in the UK. I kind of, it was a weird one. I wanted to leave the country, but I feel like it's almost like and I was speaking to Peter McCormack about this. It was like almost like my patriotic duty to stay here and orange pill the institutions and educate the market. So I feel like that's kind of what I want to do now. I think that's the priority on my list. But in terms of all-time high, the British pound actually is only at £80,000 against Bitcoin, and the all-time high was back in January of £90,000. So I think we're one of very few currencies left that we actually haven't hit 6 digits yet. Testament to how relatively how strong the pound is, but it's getting weaker. We're still £20,000 away from £100,000, which is about $33,000. So hopefully on the £100,000 mark, we can come back on and then say and have £100,000 party on that.
That sounds great. Well, Malcolm Powley, James Van Straten, thank you so much for joining us today, and we'll see you on X and the new website when it comes out.
Yeah. Hello, I'm Tim Kotzman. I'm here with this guy. His name's Tad Smith.
Hi,
Tad,
Tim. How are you?
good to see you. Thanks for making some time while you're still in New York City.
I know. It's great to be here. It's good to be seeing you here. So,
the hot topic at the conference that we both attended.
yeah, the
this week
Coinbase State of Crypto conference yesterday.
seemed to be treasury companies.
Treasury companies.
How are you thinking about treasury companies?
Treasury companies are quite a hot topic. It's interesting. It was almost 8 months ago where you did the podcast with me when I was describing the Bitcoin journey. And it's interesting. At the time, we talked a little bit about what was then called MicroStrategy, now called Strategy. There's a lot that's happened. It really has. It's quite amazing. And so let me do some precursors. First of all, I am on a learning journey with respect to treasury companies. I don't have any advice for anybody. I certainly don't offer any financial advice. I do invest in some of them, and I can tell you a little bit how I'm thinking about it. Is that helpful?
Yeah.
So why don't we just step back and look at some of the things that have evolved. One is that now called Strategy has, in the Bitcoin treasury company box, become the undisputed giant. And it's flexing its muscle in terms of scale and scope with respect to finding new and highly innovative ways to securitize Bitcoin. That's not a big surprise. What is interesting, though, is that since the first time you and I ever talked about it on the 5th of November, there's been a little bit of gravity on its multiple of net asset value. They've faced a little bit of pressure downward on the volatility of it. And May, in particular, in terms of returns versus, say, IBIT, and I use IBIT because it's the same trading day for Bitcoin, but I could have used any of them. I just used that one for an example. May was not an awesome month in performance on the part of Strategy versus IBIT. But you know what? if you look at their returns on a 3-month basis, a 5-month basis, or a 1-year basis, Strategy quietly is delivering the goods of roughly 2x Bitcoin's performance. They really are, and they are not losing, in my view, they're not losing their edge. They seem sharp as tacks. They are, I mean, Saylor and Fong are feisty. So I'm feeling pretty good about that one. And I think it's harder, and we can talk about Bitcoin treasury companies. And you have the same problem all treasury companies do, which is as the price of the asset goes up, it's harder and harder to keep the same yield going in the underlying token.
Bitcoin yield.
Bitcoin yield in that instance, but we're going to talk about presumably some others in a minute. So that's interesting. I think Metaplanet is the sort of shiny new toy, and they enjoy, first of all, they've got fabulous communications and promotion. I think you and I were lucky enough to watch a number of the leaders on the Bitcoin treasury companies yesterday at a lunch together, and Dylan LeClaire always strikes me as having a really marvelous way to articulate what they're up to and why it has a value proposition, and that's a really powerful thing. But also, of course, Metaplanet enjoys the fact it's in the Japanese market, and they get unusual tax arbitrage, as well as some special cleverness that they apply to the capital markets there. And so that one is, by the way, differentiated in a separate way. So now let's look at some of the others. I'm not an investor in Metaplanet, by the way.
You are not.
I'm not an investor in Metaplanet. And I am an investor in MicroStrategy, but I'm not an investor in, Strategy. I'm not an investor in Metaplanet. I should have gotten in at $2 for a variety of reasons related to my brokerage firm. Long story short, I have been in it and am out of it, but it's not negative about Metaplanet. It's just complicated for me to invest in it because it's Japanese, because it's an over-the-counter thing. I don't get a lot of liquidity there. So, but I got to tell you, I think what they're doing, I'm enamored of the thing. I really do. I think it's really special. So that's pretty great.
What happened yesterday?
Yes,
the first Ethereum treasury.
So let's do the elephant in the room. Is what about all these non-Bitcoin treasury companies?
Yeah, I didn't know until yesterday that there are not just one, but multiple Solana treasury companies. Like, what is in your opinion, what's the investment thesis? What is the how are these even happening? Like how are you thinking about these treasury companies? Back to that question.
Okay, so this is a really important thing. Before I go down this path, because the path, look, Bitcoin versus non-Bitcoin is inherently tribal. Even within the non-Bitcoin crypto areas, it's really quite tribal. And so I'm not speaking here from a place of sort of what I think about freedom or opportunity or any of those things. You're asking me a question about how do I think about things as an investor, and so I'm going to keep it strictly to that. And the reason that's important is because the way I measure progress is number go up as an investor. That's how I think about it, and so when you look at treasury companies, you got to put a specific investment lens on them. And you have to sift through, and by the way, I tell you this, I come from this as a person who has a very strong bias toward Bitcoin and a very strong negative bias toward ETH. Right? This is really important because in my mind, ETH, I had a lot of views on ETH. And I went to a conference. I was lucky enough to get invited to Raoul Powell's conference. And there was this a very small conference he hosts for his global macro investor subscribers. By the way, that is a phenomenal thing. It's an expensive subscription, but it's some of the best value added ever. And in fact, all of us benefit from it because the famous liquidity chart that has made the rounds comes out of that global macro investor subscription. But anyway, he holds a conference every year, and I was at it. And there's this moment in the conference where they ask for people's trade ideas. And I said, I was sort of bearish on ETH, and I said, my idea is sell ETH. It hasn't done anything, and this was sometime in March before the more recent bounce. And it was interesting. Raoul Pal was very polite about it, but he absolutely thought I was dead wrong. And I didn't even rethink. I didn't try to think about any of this until little facts kept coming up that were strange. Like I think Arthur Hayes, he's a very colorful guy on Twitter, but he understands crypto really well, and he said some very positive things about ETH. And then also it's nice to see Mando and OSF, and they said some positive things about ETH. And then the chart for ETH looked kind of interesting. And of course, my partner Dan Tapiero also thinks that ETH is a very interesting thing. And I was beginning to think, a lot of people that are really smart are saying this is kind of interesting.
But are they just talking their book?
Well, you know what?
Do they have bags
So
that they're trying to protect?
Yeah, but why talk to me? I'm retail. I mean, really?
Yeah, retail, institutional.
Moreover, they're talking to me about. And by the way, these are things he's saying in private conversation to me, or I'm not buying that necessarily. But let's get through. Let's not try to impeach people's motives. Let's go to facts for just a minute.
Sure.
And the reason I say that is because I said, maybe there's something there that I don't see, but I kind of ignored it because the asset doesn't perform. And then boom, it goes up, 60, 70% in like 3 weeks or something? What was it, like a month, 6 weeks ago?
You can tell me I don't even watch it.
Well, I'm telling you, boom. Now, by the way, anybody looking at the price today, it's $2,500 or something. It's about the same as it's been a long time, and it hasn't performed. But the Bitcoin dominance narrative, which is powerful, has just slightly twitched around their edge. Why do I say this? I say this because I said, maybe I'm missing something. Maybe my Bitcoin ideology should shift a little bit to a bit of crypto ecumenicalism.
What does that even mean?
It means that maybe I should not let ideology stand in the way of a good investment. And should I take a second look at ETH as an investment? And by the way, this is the core part of the treasury company story, isn't it? Right? Because if the one thing you have to think about is that a treasury company strategy that is founded on something that is itself not a good investment is inherently flawed, right? If that's what you're looking at, then it's simply wrong. So is it possible that my strong penchant toward Bitcoin as a superior store of value and a perfect money, if you will, might be true, but also it might not necessarily crowd out the possibility there are other investment opportunities in the space? Just ask the question. Well, I didn't think much about that until this week when two things came up. First, a podcast I occasionally listen to called Bankless had Joe Lubin on. Joe Lubin, of course, the prominent chairman of Consensus and the co-founder of the Ethereum. And moreover, more recently, he did a very interesting treasury company called SharpLink Gaming, which is trading under the ticker SBET. And this is the point you talked about in the last 24 hours. When it came out of the gate, when the transaction was announced, the stock soared. It settled down to something like $32 yesterday afternoon. After the market closed, they dropped an SEC filing that spooked the market, and the price fell to like $8.88 after hours. I couldn't help myself. Anything that looked like that, I said I want to buy a little bit of that, so I bought some. So I'm talking my book in effect. It's a small amount, as it were, but this is for purely. And I then went down the rabbit hole of, well, what about an Ethereum-based treasury company? Really, what about Ethereum? Okay, so let's start going at some of the facts. The first thing I thought was, well, Bitcoin is superior because it's fixed at 21 million. And I said, why is that a positive? Well, one reason that's, and by the way, it is a positive. One reason that's positive is because it means that there's only that much and there won't be any more, which is another way of saying that the issuance of it or the inflation of it is very low. And I thought that ETH had no fixed cap, correct. But having no fixed cap doesn't necessarily mean that you don't have inflation. So I looked at the inflation rate, and surprise, surprise, the inflation rate right now of ETH is about 0.68, and Bitcoin's actually 0.85. It's higher. Second point, the inflation rate since the fork, the big merge, I think they call it, on ETH, has been low. It's been 0.09. It turns out while there is a maximum theoretical inflation rate of ETH of 1.51%, which is right around where gold is, as the activity on the chain increases, they burn more and more ETH. And the reason that's important is it means that it's reducing their inflation rate. So in other words, ETH has viability as a store of value. I'm not comparing it necessarily to Bitcoin. I'm just saying as an example, independent, as a store of value because the issuance is predictable, and secondly, capped at a level that's maxes out at gold. In other words, if you think gold has any possibility of a store of value, how can you dismiss ETH? They're intellectually inconsistent.
So the max inflation
inflation rate's 1.51%. You don't have to believe me.
Mm-hmm.
Another Bankless podcast this very week came out, and they interviewed Vivek Raman and Danny Ryan, who were talking about something, and you guys take this down, ethddigitaloil.com. It is the bull case for ETH. It just came out. It's a June report, and it goes through all of this material, which I've poured over because, again, I'm thinking about how does number go up. I'm not into ideology. I'm not talking about anything tribal. I'm just saying, how do I make good returns? Mm. And so I was shocked by that. I had no idea. It was a complete revelation to me that the inflation rate was as low as it was, and moreover that it caps at 1.51. Well, that does give a credible case for a store of value. But then you come to, well, what on earth is the use case for ETH? I thought all this liquidity had been siphoned off into so-called L2s. Mm-hmm. Well, listen, for the average investor, and remember, I'm sort of a TradFi guy by heart. The moment you get between L1 and L2, I lose the will to live. I mean, that just is too much complexity. Mm-hmm. The nice thing about Bitcoin is the story is clear. The narrative is clear. It's digital gold. It goes on the Treasury balance sheet. This is a powerful asset to fuel future returns. ETH, I'm not sure what it is. I don't understand why it's not moved very much. I don't understand why it's been deflated from value. I don't understand why Bitcoin is so dominant. So you start peeling these layers back and you see, well, part of the problem is that ETH hasn't communicated itself very well. And remember, it's probably 2 years behind Bitcoin in terms of the regulatory development. Think about the ETF. But crucially, on 2 occasions, the SEC has said ETH is a commodity, which means it doesn't have counterparty risk.
But you're saying ETH has communicated about as effectively as Ryan Cohen has?
They haven't communicated very well. Okay. You got it. They haven't communicated. They haven't done a good job of communicating. And moreover, they have, by the way, and also that ETH itself is so complex. I mean, it provides smart contracts, it provides internet, it provides the infrastructure for large institutions to move things around. It provides the sort of gateway for the digital economy. I mean, all this stuff is, to me, these are just words. And meanwhile, Bitcoin is such a pristine asset in terms of narrative. So I say, I don't know. To me, Bitcoin treasury companies are supremely powerful in what they do. There are a lot of them. They need both a narrative that's differentiated, and they need a clarity, and moreover, they need to be able to answer the question in 1 year, if there are 10 times as many Bitcoin treasury companies, how do they add value? And the answer to that is, I don't know. It may be that you are in a corner of the universe like Japan where it works really well. It may be that you are the largest and you are able to do things from your scale that others can't. In the case of ETH, this new one, SBET, is the only one in the game. And there are aspects of it that are unique and differentiated and arguably have value if you think that ETH does. And by the way, there's a case for that.
Was the SEC filing, what was in that caused the price to drop? Was it just them saying they bought ETH?
Well, no, what happened is apparently the SEC filing was about a significant stock issuance, which was apparently part of their pipe. So the question, there was no context at the time the thing dropped around the filing, and so the market didn't know how to interpret it.
Okay.
So the stock fell precipitously. It's since been clarified by Joe Lubin and also his general counsel. But again, it was an example of not the cleanest communication. And so then I look at, okay, well, let's set that aside. That one looks kind of interesting to me.
But was there any like white paper or like
Well, this is the point.
like declaration of like, here's our thesis on why we're doing an Ethereum treasury company?
Well, see,
I'm
this
just
is
trying-
such a fabulous question because no.
Okay.
And or if there was, I didn't see it.
Okay.
And look at what Saylor has done to make Bitcoin treasury companies clear.
Mhm.
You have to admire the guy. He's made them so clear. They have they have a crisp understanding of what's going on. And then let's do Solana for just a minute, just to be clear. There's also another one, Solana. I think it's DeFi Dev Corp. This one, the problem I have with Solana is it doesn't have the institutional guardrail stuff that you would get from ETH. I don't see the store of value. It's got an inflation rate right now of around 5%. I can't understand more than that about it. So for me, it's not something that you put it on the balance sheet, it's going to have any sort of effect. So you've got one interesting play in the ETH space, but you've got to get your mind around whether ETH is a store of value and a real opportunity and priced correctly. And then if you get yourself in that vein, SBET is interesting. But then you've got the whole gamut of Bitcoin treasury companies, and they, to me, they're more being minted every day, and they really they need to have differentiated places. Bitcoin treasury companies, as they multiply, you would expect the natural pressure on MNAV to be down.
Mhm.
So,
What is the magic bullet? Is there a magic bullet for MNAV? Is it this communication and media side of it? Is it something else? Because just because you go and do one podcast a day doesn't necessarily mean your MNAV is going to be at 10. But if you don't communicate anything, it's we've seen the the market response to someone that doesn't communicate and literally use the words if the thesis is correct.
so another really good resource I use is James Check of Australia. He coincidentally came out today with an analysis on Bitcoin treasury companies. I'm sure it's on Twitter somewhere. And he said that it all comes down to what the Aussies call, go hard or go home. In other words, you have to be stacking at a tremendous pace, or you have to be really, really huge. And he separates them that way. And in that instance, and by the way, he makes the point, and this is crucial, which is, again, when you have a theoretical ceiling, not even a practical ceiling on the number that you can buy, inherently you are going to not be able to boost your Bitcoin yield at the same pace over time. You just can't. It's a mathematical truism.
Mhm.
Because too much capital is required. In that instance, you got to have another trick. What's the trick? I don't know.
Could it be listing in multiple different capital markets and in essence being trading
Sure, it could be,
27
but
hours a day?
how hard? I mean, how much of a moat is that?
It's not if everybody can do it.
Well, that's the point.
Yeah.
So one of the powerful things about strategy, from my perspective, is it has a moat, which is it's large
Mhm.
and huge scale, and I don't think anybody will ever catch them. I mean, one of the things that came up in the lunch yesterday with you, as you know, is Tom Lee predicted it would be the largest company in the world, and I think he meant most valuable.
Mhm.
And I wouldn't be surprised. I don't know, but I wouldn't be surprised. And then, of course, I think Metaplanet's got the Japan angle, and that's also powerful. But you really need to find an area that's differentiated, because having Bitcoin on your balance sheet is not a source of differentiation. versus other ones that have Bitcoin on their balance sheet. So over the long term, maybe not even over the medium term.
What are your thoughts on multiple Bitcoin treasury company executives coming out and saying, we will buy or sell Bitcoin as needed to maximize Bitcoin per share?
I think CEOs of public companies have a fundamental responsibility to advance their shareholders' interests. And I can't imagine all the scenarios that might happen in the world, but there are probably scenarios where buying Bitcoin for the balance sheet is a positive, and there are probably rare ones where unusual circumstances where to sell might not be a bad idea.
Is strategy at a point now where it actually, where they should consider that as an option, or
No,
is,
no,
or
no,
is,
no, no.
or is STRD
No,
using that to buy back the common shares? Is that the solution to not having to sell the Bitcoin?
I have to say, I'm impressed with strategy. I really am. I think they are pivoting very rapidly. They're also experiencing, as I said, pressure on MNAV, pressure on volatility, and they've got a lot of narrative noise. I mean, by the way, when other Bitcoin companies are springing up around them, that takes a lot of the sort of sparkle off of strategy, because people are constantly comparing them. And I continue to be impressed with how they are pivoting, accelerating, trying new things, doing new stuff. And moreover, when you hear Saylor's description of how he got to this place, it is one of improvisation, innovation, pivoting. He might say something at one moment, and I think in 3 months, if it no longer makes sense for him, he will be unsentimental about changing his view.
It sounds like a huge positive. I mean, it has been, as
I think
iterated up to this point.
I think it is. I mean, he himself will tell you, there's no way that strategy today, setting aside the metrics, strategy today could have been envisioned by them or by anyone really in August of 2020 when they embarked on this. They're not only learning along the way, they're teaching all the rest of us and teaching everybody else. And by the way, what's really powerful about what Metaplanet is doing is they are teaching us and in different ways from the perspective of the Japanese market. And whether it's capital gains situation over there, capital gains taxes, or something else, it is a powerful thing to watch. So, treasury companies.
Are we going to?
They're not just Bitcoin treasury.
Are we going?
They're mostly Bitcoin treasury companies.
Mostly.
Mostly.
Are we going to see a long tail of these? Or are we going to see a SUI treasury company?
I think we're going to see treasury companies. Oh my gosh, I see SUI's a good example, because I don't understand SUI as a store of value any more than I understand Solana as a store of value.
Yeah.
I think, and I made this case earlier, ETH has a credible argument to be a store of value, as well as a lot of other things, which makes it very complex to get your mind around. Whether it is superior to Bitcoin or not, I'll just tell you, with my own investing, I have more Bitcoin exposure than I do ETH exposure, a lot more. But I'm, as I said, prepared to have my view changed by facts. And I'll say, are we really going to argue that ETH isn't in many ways more flexible and have higher utility in a lot of different ways? I mean, one prominent Bitcoin leader said to me at one point that there's Bitcoin and then there's also the so-called venture projects. Well, and some people like to estimate the value of ETH by the revenue produced in the system. And but that ignores the possibility that with steady, very low issuance, it couldn't also be somehow a store of value with a different characteristic or different flavor. And again, setting aside ideology, I look at it as a number go up thing, and I'm reasonably persuaded enough to take a position in it. But I wouldn't put anything that's not a store of value on a balance sheet if I were a company. That's my 2 cents.
So
I mean,
Bitcoin?
it's not a, well, Bitcoin's a great store of value. In my mind, it's what is it? Perfect money.
I would like to read to you a post from Adam Back and get your reaction to it. This is from 2:00 a.m. Eastern time today.
Okay, well, already I'm impressed. If he's in our time zone and he posted at 2 a.m. today, I'm impressed.
Alt season is canceled. ETH BTC at 5-year lows, and they strategically buy ETH. Bitcoin is the hurdle rate. If you want Bitcoin Alpha, buy Bitcoin Treasury Company stock.
Okay, 2 things on this. First, I agree that Bitcoin is the hurdle rate. In fact, I said that last November with you, that Bitcoin's the hurdle rate. If something can't outperform Bitcoin, then why sell Bitcoin and buy it? Right? So that's the base case. And I will also agree with the inference I draw from that post that ETH has not outperformed Bitcoin in quite a long while.
Mm-hmm.
Period.
Okay.
It's full stop. But, and here's the but, if you think about where we are and you say, is there a reason that I'm missing that might change? Such as, for example, ETH has been in the middle of figuring out the L2, L1 thing. The regulatory environment in the United States has been much earlier for Bitcoin. The narrative around Bitcoin, which you know drives price, in my view, is much more powerful, much simpler to get your mind around, much clearer. The institutions understand it and they can put money into it. By the way, Bitcoin right now is not a retail phenomenon; it's an institutional phenomenon. I mean, you can look at that. I mean, how many Google searches are you seeing versus the price? All these things. It's
very low.
Right, it's low. What's going on now is institutional and sovereign money are flowing into it at a steady pace because they understand the narrative, they understand the concept, they understand digital gold. And ETH is not, the message behind ETH is not getting out. But just because the message isn't getting out doesn't mean there's not substance, which is why I started saying, some really smart people are saying, there's something here. And, I love Bitcoin, but I also want number to go up. So let me just have a look.
Mm-hmm.
And, I'm pulling on threads, and it's possible Adam's right, but it's a bold statement. And I'm going to bet he's not going to be right.
That's a bold bet.
Well, we'll see. I think ETH is going to do a lot better than current expectations. And also I think ETH has got a shot, improbable perhaps in the minds of some, but maybe, and by the way, certainly in my mind, I mean, I told you I started at Raoul Pal's conference and said it's a sell. But I'm coming around and I think that's got a shot. And so I'm prepared to put a little capital behind that bet. I could lose it. Thank goodness my Bitcoin bets will cover it for me. But we'll see.
And you need to head to the airport.
I have to go to the airport.
About 5-10 minutes.
Yep.
Okay.
So
I'm
gonna get out of Dodge after what I just said, right?
Yeah, we have
On the Bitcoin Treasury podcast.
Yeah, we'll take security precautions.
Security precautions.
Yeah.
Listen.
Any final thoughts and anything that you're particularly keeping an eye on in macro in treasury companies? I'll leave it at that.
Well, I want to leave with the thought that in all of these things, what I really admire is leadership. And it is it is hard to lean into new technologies. And remember, the crucial thing about all this is, and we're also, one of the reasons your podcast exists, right, is it's very difficult for us to see the future. Technology is evolving so rapidly. How's this going to change? And so leaders are out there saying, I'm not sure where the future is going to be, but I'm going to lead people to try to get to that answer. Saylor does a marvelous job of this. I think Simon Gorovich does a really great job. I thought Eric Simler was fantastic yesterday on the panel. I thought he did a really great job. Dylan Leclerc. I mean, there are lots of them that are doing this that I think are really interesting. I've already been, I thought the ETH crowd could do a little better on the communication, if in fact they have the substance to deliver the goods. And I think they could learn a lot from the Bitcoin crowd. But I admire all of these leaders who are trying to show us the path to a better future. And it's important to keep that in mind, to me, which is, it's easy for me, for example, to criticize other leaders, or criticize leaders generally, setting me aside for just a minute, for being out there, or a different metaphor, playing in the arena. But I'm just an investor. I'm not in this arena. And they're doing difficult things, and they're doing it the best they can. And we make our bets. Maybe I'll make a little money on the ETH bet. Maybe I won't. We'll see. Maybe we'll make a little money on the Bitcoin Treasury bet. Maybe not. We'll see. But you have to have admiration for what they're up to. It really is. It's the best of us in these people that are doing these things. And to tear them down or impeach their motives, or any of those things, I just don't think is the right call. These are all people of public companies. They have legal fiduciary responsibilities, and they're doing the best they can.
Very well put, Tad. Thank you for your time.
Thanks for having me.
On this beautiful, I think it's beautiful outside Friday afternoon.
So if I buy a little ETH, and I buy a little ETH in a little ETH treasury company, does this mean I'm excommunicated from the Bitcoin Treasury podcast? Does this mean or are you going to wait until you see what the posts say?
You're here right now. I think in the same way that it's not helpful for someone to say, I'm not going to try to even understand Bitcoin whatsoever, I don't think it's helpful for people to not be educated on at least a little bit of what is the thesis, and just from a place of understanding,
The one thing I do have a caution. May I leave you with a caution?
Absolutely.
You just put it in my head.
I don't think people wake up in the morning and say, I think Dogecoin is really not a great idea.
By the way, we haven't talked about all those coins. Can I just talk about all those coins? Those are not, those to me are not real investments for me.
The meme coins.
Well, but all of them. I mean, I've already gone as far as I would even consider.
Okay.
But pretty much the
Bitcoin
universe of coins
Yeah.
beyond that, to me, is just not on my list. And I'll tell you what, sure, I might put a little tiny money in Solana just to see what happens, or SWE just to see what happens. But all the rest, and those are speculative, those are sort of bets. It's like going to Vegas in my mind, because they're not only transparently venture projects. In my mind, they strike me as, and not all of them. I mean, some of them are doing, they are venture projects to me are, and many of them doing very exciting things, but, and actually some of them transformative things while I think about it. But that doesn't mean the token is a good investment, right? I want to see how those things produce. They're companies with centralized token structures, maybe through a third-party foundation, but they're centralized token structures. And so for me, it's very important to see how they produce returns, and then we can take them up. And they're not appropriate for treasury companies strategies, not. So,
got it. So was that the word of caution?
Yeah, the word of caution is they're different. Meaning, I'm not saying this is all one big. To be crypto ecumenical doesn't mean all of these things are the same. You started with a question, what are you thinking about treasury company strategies? And interestingly, you said treasury company strategies, not Bitcoin treasury company strategies. And what I'm saying is there's certainly one that is clearly works. There's one that's sort of trying it out. There's another one's trying it out with maybe trying it out, but for me, a little harder stretch to get to. And we'll see how this evolves. So,
Dan,
thank you. Great to see you.
great to see you. Thanks everybody for tuning in, and we'll see. All right, we're live. It's just that simple, Mason.
Wow. I
We
love the
were-
internet.
There was a moment in time when we were not live, and now we are live. I'm just looking. Yep, looks like we're live. I'm gonna repost myself, right? Sounds weird, but sometimes that's important.
Same here. Give us a moment if you're here already so we can share this from our accounts.
Yeah. We are sharing the Mason Carter from Acropolis on Bitcoin Treasury Companies. Oh, there it is. Mason Carter liked your post. Should be my post. Well, welcome everybody. My name's Tim Kotzman. I have a show called the Bitcoin Treasuries Podcast. And more lately, we're doing some live streams. I think it's kind of a cool, different kind of vibe where, right, we're not going to edit out any of the ums or ahs. And I like what you said before we started streaming, Mason. If we can just have a conversation that we'd have anyways, kind of, right, if we're meeting up at a coffee shop or for an adult beverage or two, then like just kind of a state of like, where are we? But of course, starting with your background, like to where you are now as co-founder of Acropolis and principal at Early Riders. Yeah, where did you come from? Where are you going? Have you ever been called Cotton Eye Joe? What? Tell us a little bit about yourself.
Well, I am from Texas, so we'll start there. So maybe I have been called Cotton Eye Joe at least a couple of times in my life. But yeah, we're gonna make this more casual than the typical podcast that Tim does or the podcast that we do at Acropolis. I think we're almost at 50 episodes. So if you want the super polished, into the weeds analysis and Bitcoin Treasury Alpha, then go there. But this will be more casual. So I'll tell y'all a little bit about myself, how I got into Bitcoin, and then how I came to co-founding Acropolis. So I got into Bitcoin when I was a teenager, actually in 2017. And I thought it was really cool because I had these prior experiences growing up. I grew up lower income, don't have an inheritance coming my way or anything like that. And once when I was 11 years old, my parents had our only bank account frozen by a creditor that they had owed money to at least 5 years in the past. So they came in and they froze our only bank account. We had one account and one debit card. And I remember that sticking with me so strongly. Like, what do you mean they froze our money? What do you mean we can't buy gas or buy bread? We had to go figure out how to hire a lawyer and get ourselves out of this trouble. And that really stuck with me. So when I discovered Bitcoin, a few years later, I was like, wow, there's this money that no one can come in and freeze. No one can just pull if they feel like it, or, all the reasons why we like Bitcoin. So I started buying it and researching it. Luckily, got into my shitcoin phase early. I was a naive teenager and fell for the XRPs of the world and all the different ICO scams in 2017. But luckily, I put the most of my little capital that I had back then into Bitcoin and never sold it. Even to this day, I've never sold any meaningful amount of Bitcoin, which I'm really proud of. But back then, which now is markedly different, but back then you had folks like Larry Fink, Warren Buffett, Jamie Dimon saying that it was a pet rock, rat poison, only for criminals. And I'm looking at these guys like, they're the financial titans of our life. So maybe I'm wrong. Maybe I don't understand this Bitcoin thing. So no one in my family had went to college. I went to college and studied finance really to confirm my thesis in Bitcoin. So went to Texas Tech University out in West Texas, had some different internships at Dell Technologies, which is now interesting, but obviously back then there was no Bitcoin related talk about Dell. Did an internship in commercial real estate as well as traditional equity management. And by the end of it, I didn't think that there was a company that I wanted to join that was Bitcoin only, that was going to stand the test of time. But I still wanted to put myself in some sort of adjacent position where I can advocate for Bitcoin or work on Bitcoin products or projects. So I ended up joining eBay, where I joined a program called the Finance Futures Program. It was 5 of us every year, or 5 people are accepted every year. And you sort of get a lot of freedom to rotate through different areas of the business, learn a lot. You have access to the C-suite, access to other executives, and freedom to work on projects. So I took that freedom to work on Bitcoin. I spent 3 years at eBay and did everything I could to advocate for eBay or for Bitcoin within the firm, whether that's from we actually built a test product to allow sellers to get paid in Bitcoin. The idea was there's only 3 ways to acquire Bitcoin. You can either mine it, or you can use your disposable income, or you can sell your old stuff for it. And the third way, there's really no solution at scale that would allow you to do that. So we worked on that. Ultimately, eBay decided to focus on other digital projects like NFTs, which I wasn't so happy about. And then I shifted my focus on advocating for it from a balance sheet perspective. So I joined the Treasury team after I finished up with my program, and after probably 6 months of just being the Bitcoin guy and advocating within the team, really no one took me seriously. And it was unfortunate because I thought it was such a great opportunity for eBay to recapitalize and to take a business that still makes a lot of money. eBay is a very, very healthy company, makes about, and these are just rough numbers, about 10 billion in revenue and about 3 billion in profit. So it basically prints money, and they have to figure out what to do with it. But at that time, there also really wasn't a great solution for the custody aspect of it, because we all know what happens when you leave Bitcoin with a single point of failure, or you end up leaving it at Mt. Gox, or leaving it at Celsius or FTX or BlockFi, or even in the TradFi world, you leave it with Lehman, the trusted firm on Wall Street. And I always like to say, regardless of whether the firm is Bitcoin native or TradFi, or if it's been around for 5 years or 150 years, you don't want to leave a digital bearer asset in that way. And then your next logical step might be, how do we self-custody as a corporation? Which, when you start thinking about the idea of these publicly traded companies using hardware devices and seed phrases to store the firms and the shareholders' Bitcoin, it just doesn't make a lot of sense. And I would consult with the CFO of eBay and teach him about Bitcoin. And one of our meetings, I came in with some ledgers to show him, how you can be fully self-sovereign and hold your own keys and have your own Bitcoin that you're fully responsible for. And he literally laughed at me and was like, "How much money do you have on these things?" And I said, "Sir, probably more than I'm comfortable with sharing, or you'd be comfortable with knowing." And that really just, it made me think that there's not a firm that can help other firms adopt Bitcoin treasuries in a safe way. And again, the most important piece of that was the custody aspect of it. So then I became familiar with Onramp's multi-institution custody model, which I'm sure folks who follow you are aware, but just in case you're not, it's the best of both worlds, where instead of leaving all of your Bitcoin with an exchange or a single point of failure, or custodying it all yourself with hardware devices and seed phrases, you combine the best of both worlds. So it's Bitcoin native multi-sig, where each of the signers in the quorum is an institutional grade custodian. So in our case, it's BitGo, Onramp, and CoinCover out of the UK. And this allows companies to get actual Bitcoin exposure on chain, verifiable, not in an omnibus account, not pooled with, hundreds of other companies. But at the end of the day, like I said, it's combining the best of both worlds. So we saw that solution, or I saw that solution, ended up leaving eBay, joining Early Riders, which is the Bitcoin denominated venture fund. In our eyes, we still think it's the only one on earth that is actually operating with Bitcoin as the hurdle rate. So we raise from LPs, deploy to portfolio companies, and in the future will return to LPs in Bitcoin, and everything that we do is denominated in Bitcoin. And we're sitting together with Michael Tanguma, Brian Kubelis, and the partners at Early Riders, thinking about what's the first company that we want to incubate in this Early Riders ecosystem. And it was, back when the Bitcoin Treasury trend wasn't as trendy as it is now, but we're still very early. So we ended up launching Acropolis ahead of Nashville, the Bitcoin 2024 conference. And we provide all sorts of services on top of just custody, whether it's accumulation planning, accounting support, investor relations support. If you want to go to the capital markets and raise debt and equity in order to buy more Bitcoin, we support that as well as other things. I don't want to make this just like a giant Acropolis advertisement. But yeah, and then we were working with smaller companies in the beginning, and we've since moved to mid to large size privates and even some publics now. So we're chugging along, and I know that was really long, but hopefully that was a good overall view into my journey and how we got here today.
Yeah, I'm sure folks appreciate that. So when you say Early Riders is Bitcoin denominated, does that mean everything kind of sits on the balance sheet at Early Riders as Bitcoin, and then it's only deployed out of Bitcoin as necessary for the opportunities for the portfolio companies or whatever you want to call them, and then it comes back as Bitcoin as well? Or can you walk us through that a little bit?
Correct. So all of the companies within the Early Riders portfolio have Bitcoin treasuries. I mean, of course, we have bank accounts for you to do operating expenses and to run the business, but the vast majority of the capital needs to sit in Bitcoin because we see Bitcoin as the hurdle rate. And we've been saying this for a long time, even before that was as trendy as it is now. But we fundamentally want each and every portfolio company to measure every decision against the performance of Bitcoin. So whether that's going on a marketing campaign or hiring your next guy or girl, or whatever it may be, it needs to be measured against Bitcoin, because the fund itself will not make any money until we clear Bitcoin as the hurdle rate. So we won't be taking any fees if our investments don't return more than Bitcoin would have over that period. So yes, we do. We raised from LPs in Bitcoin. We do accept dollars, but then we just immediately buy Bitcoin with those dollars. And then, yeah, it's all Bitcoin denominated, Bitcoin deployed. And the portfolio companies right now are exclusively Bitcoin companies, but they don't need to be in the future. They can be, companies with strong fundamentals that follow our guidelines. I mean, we sort of have a few core pillars of our fund. It's doing more with less. It's using Bitcoin as the hurdle rate. The fact that Bitcoin is going to change capital stacks, and a few others. So we sort of send those across the portfolio and operate in that way.
And can you describe what the ideal project would look like that Early Riders might want to dig deeper on to potentially look to invest in? Is the ideal company focused on Bitcoin and then going out from there, just to put guardrails on it if people are listening and they're working on a project, to not waste anyone's time and be like, is this something that you guys would like to look at? Any guardrails around that or
Yeah,
details?
we're almost value investors. But it's funny, like a value investor would say, no way, like you guys are a Bitcoin firm. How could you possibly say you're value investors? But really, you're never going to see early riders, investing in Bitcoin mining on the moon or all the different L2s that there are. It's more, and it's funny, I always use that example. I feel like I've been using that example for at least a year. And then we actually had a deck get sent that was Bitcoin mining on the moon. So that's actually a company that exists. I would shout them out, but I forgot the name. But we're mostly focused on basic Bitcoin infrastructure companies at the moment. So Onramp is sort of the crown jewel of the portfolio. It's that multi-institution custody that I mentioned. And then we have Acropolis, so corporate Bitcoin treasury solution. We also have Flash, which is a Bitcoin payments company, allowing businesses to onboard and use it for cross-border payments and customer payments. And then the other portfolio company that's public right now is Onramp Mina. So essentially doing the same thing, but applying it with a Bitcoiner first principles approach from the Middle East. So yeah, I think that about sums it up. It's mostly Bitcoin infrastructure, sort of boring things, but the things that are completely necessary for the asset to scale into $100+ trillion, because fundamentally, I don't think hardware devices and seed phrases will scale to $100+ trillion. Now, don't get me wrong. Sometimes I get misconstrued. That's great for a sovereign individual. But if we're talking countries, companies, states, cities, funds, like it's not a sustainable solution. So that's another core pillar of the portfolio.
Got it. If someone has a project and they want to reach out to you and send you their slide deck that does not have to do with mining Bitcoin on the moon, where should they send it?
Yeah, feel free to message me directly. My messages are open, or you can also send an email to mason@earlyriders.com.
Got it. When I spoke with Chase last week, he kind of walked through some of the realities of the conversations of what you're having there, kind of the good, the bad, the ugly. Do you have any takes from your seat as far as like, are a lot of the conversations about cross-border payments or employee benefits or an actual Bitcoin treasury strategy, or and what other conversations are you having, and are they just kind of one-off, like people asking if they can put Dogecoin on their balance sheet, or other interesting examples, or what's the day-to-day been like over the past maybe 3 to 6 months since we're sitting here in the middle of June?
Yeah, let's see where to start. So I think primarily the interest that we're seeing is just they want the Bitcoin expert to sit over their shoulder and help them develop a plan, everything from custody to accumulation to how do we talk to our employees about this. So really, and then there's of course a lot that are interested in the accretive financing and a lot that are interested in specific portions of it. But really, it's just we're getting back to the basics with a lot of the clients that we work with, because I would say a lot of our clients understand enough about Bitcoin to know that they want exposure for their firm, but not enough to understand how Bitcoin is different than Ethereum, why Ethereum is not a treasury asset, or why is Bitcoin not bad for the environment, or why is Bitcoin not only used for criminals. So a lot of times we're getting to the basics, but I think a strong take I want to talk about today is the fact that I do not believe that Bitcoin treasury companies are a bubble. I think that idea is already just a popular narrative that people want to say to sound smart. Um, and at the end of the day, a lot of companies that adopt a Bitcoin treasury strategy are going to fail, but it has nothing to do with Bitcoin and more to do with how they are careful and how they are taking this strategy seriously and not over leveraging. And, a lot of times we have to be the people, even though Acropolis stores all of our treasury in Bitcoin and we're all Bitcoin maximalist, everyone that works at the firm, are all Bitcoin only. A lot of the times we have to come in and say, because of the industry that you're in, you need more capital in case of an emergency. And if there's a drawdown, we don't want to have you as a forced seller of Bitcoin at the bottom. So a lot of times we have to come in and say, hey, let's actually tamp this down just a bit. We're still going to put as much of the current cash position or current asset position into Bitcoin as we can. We want to smartly leverage certain assets that you might have. But at the end of the day, we're pretty conservative. We want all Acropolis clients to last forever. We want everyone who works with Acropolis to be able to withstand any downturn and also see the upside of this network that's still just 2 trillion. So that's a lot of the conversations we have. And it's really hard to convince me that we're in a bubble when there's tens of thousands of companies that are all using dollars and pounds and all the different currencies around the world. And they all have investments in treasuries and, equity stakes in other companies. And still, I think we're at, correct me if I'm wrong, but maybe 75 public companies that are doing this. As long as, they're buying real Bitcoin. They're not going through these custodial risks that we talked about earlier. I'm not concerned about the Bitcoin treasury bubble actually being a bubble. I think it's a new paradigm. I think a lot of people would have said that the internet was a bubble, and it did end up having a .com style crash, but now 20 years later, every company on earth is an internet company, just like every company is a media company. And we believe that everyone will end up being a Bitcoin company because it's fundamentally a better way to store shareholder value, to grow shareholder value, to remit payments around the world, and all of the other reasons why we love Bitcoin. So I think that'll be my strong take for the day is we are not in a bubble, and we're far from it.
What's your take on Cardano and Polkadot and maybe others coming out over the past few days, and the founder of Cardano, at least, like literally saying on video that they're going to be selling their tokens to build a Bitcoin treasury? Like what does that say about where we are in the adoption and really, right, other digital securities most of the time now saying that they want to build a Bitcoin treasury? Like, was that on your bingo card? And what's your take on it?
Yeah, to me, that just shows you the desperation that the altcoins are in right now. But really, it's nothing different than they've been doing this entire time, because they're constantly just trying to convince people. And what drives me the most crazy is XRP, because I feel like XRP was, I mentioned it earlier, I went through my shitcoin phase early. And XRP was one of those tokens that I bought in 2017 along with Bitcoin. And if you compare the performance over the last 3 months, 6 months, yeah, it might be up a couple 100%. But if you price it in Bitcoin over the last 8-9 years, it's down 99.5%. And the only way that Ripple or XRP ever gets into the market is by them selling it. So, just follow what they do, right? They're not buying their own tokens. They're not actually making progress with working with the banks, right? Like everyone who's an XRP head talks about how it'll be the ledger that every bank uses and all this nonsense and hoopla. But at the end of the day, Bitcoin is the only one that's being adopted. It's the only one that the market is actually demanding. It's the only one with a credible neutrality. It's the only one that's able to actually enforce the 21 million fixed supply. It's the only one that's viable for a treasury asset. So it makes sense if these shitcoins want to be around for another 5 years. Not that I want them to. They're going to have to acquire more Bitcoin, and it's just funny that they're doing it so publicly instead of rather slyly now. But yeah, it's the same thing that's always happened. Every altcoin trader, every alternative to Bitcoin is just at the end of the day trying to get more Bitcoin. So, I mean, maybe they're like all the clients that we work with. Maybe they need to call Acropolis and see how they can acquire more Bitcoin. But I'd rather not work with them.
Yeah. Any reaction to Michael Saylor being appointed as an advisor to the country of Pakistan as a Bitcoin and crypto advisor? I mean, what does that say about where we are? Maybe nation states are taking this more seriously and maybe on a more expedited schedule than what we had thought, or no?
I love it. I just saw this news before joining the stream, so I haven't been able to dig into it too much in terms of what his actual role is. But this was what Saylor set out to do when he stepped down as CEO of MicroStrategy at the time, and then wanted to focus on helping take this strategy to other companies, and it seems like other countries. So, and it's all good for him, right? I mean, you could see it as a selfless endeavor in that you're helping Pakistan and the people of Pakistan capitalize their country and, survive and have the same advantage that the United States will eventually have with a strategic Bitcoin reserve. But I mean, I think it's bullish. I love it. I love to see Saylor doing it. And like I said, it is selfish. It is selfless and selfish. But that's okay because really that's what we're all here for, right? I mean, Bitcoin has a lot of collateral positive effects that we're all very passionate about. But at the end of the day, we all at least came into the space for number go up, and Saylor is definitely incentivized to help that happen with almost 600,000 Bitcoin on the company balance sheet at this point, and I'm sure at least a few dozen thousand for him personally.
Yeah. I mean, it reminds me of one, everything's good for Bitcoin, and it's going to take all of us. And it also kind of underscores almost a feeling for me of like an El Salvador, where it's not going to be, one of the bigger capital markets that's, you know, kind of signaling this kind of stuff first, although, of course, the United States has.
How cool would that be, though? I mean, how cool would it be for Pakistan to become a tourist destination that's beautiful and has a giant Bitcoin treasury? I mean, I'm sure a lot of the folks that are watching and listening to this are aware of El Salvador, but they were the most dangerous country, I believe, in the Southern Hemisphere. I think they were called the murder capital of the world, and
Mhm.
now they've cut that by 99%. Bukele has a 90% approval rating. And everyone that I know that's been to El Salvador says it's beautiful. I've spoke to people that are from there, and they've said that the difference is night and day. You've got big American tech companies like Google setting up shop there. And overall, I mean, it's great for the people. It's great for the people of El Salvador. It's great for the area. It's great for Bitcoin adoption in countries because you can see a case study in what happened that this country, for this country that went all in on Bitcoin. I would love to see that for Pakistan. I'm sure it's a beautiful place that's, had a lot of issues and, troubles over the last 20 years, a lot of it due to our U.S. involvement and the tension around the region. But I would love to see Pakistan and every country around the world thriving and not doing what Germany did. I mean, Germany already is down, I don't know how many billions from selling around 50K or whatever the price was. But the more positive stories of countries buying Bitcoin and negative stories of countries that had Bitcoin and squandered it is great. I love to see it.
Yeah. At the risk of getting into a price prediction sort of conversation, what's your take on where we are in the cycle and how, the age old statement, this time is different, right? Maybe it is, maybe it's not. But I mean, I hear a lot of very well respected people in the industry, such as Adam Beck and Samson Mao and others, saying, like, this is where the steep part of the S curve kicks in and we're going to $1 million. And then I have conversations with other very well respected people in the industry, and they're like, look, you might have 6 months left, right? We're going to 150,000 and that's it. Is there a way to approach this question from like a macro and a cycles, but adding in corporates and nation states point of view without it just becoming like a very non-productive price prediction conversation?
Right. Yeah, I mean, I've been through a few cycles at this point in Bitcoin, and I'm not even going to hedge my bets. I do think that this time is different. I really do think that the days of long Bitcoin bear markets are more than likely over. And that's not to say that along the way we won't have 30, 40% drops that scares the hell out of everybody. And everyone, if you're the Bitcoiner in your friend group or family group, then you're going to get calls of, should I have sold? Is it over? But when you have this demand from all the Bitcoin treasury companies, the countries, nation states, cities, funds, pensions, I mean, we could go down for the next 5 minutes of all the different entities that are acquiring Bitcoin. They're interested in Bitcoin and they need Bitcoin. I fundamentally think it is different this time. I hope I'm wrong. I hope that we have more of a chance to personally buy Bitcoin and capitalize our companies with Bitcoin. But my favorite Bitcoin book is Parker Lewis's Gradually Then Suddenly. I think that is how Bitcoin adoption will happen. I think we can argue over when that suddenly moment is. I think if you would have asked me 5 years ago, it would have been closer to 10 years from today. But I think in the next 5 years, I mean, I know, Tim, you're calling for 1 million Bitcoin this year. I'm a bit more conservative for this year. I think we end up in the 200s or 300s. I think I've said 221 before. But when you have so much Bitcoin getting sucked up every day, yet you only have a nominal amount being produced every day, I mean, Strategy just over the weekend, without even selling a share, was able to buy another 10,000 Bitcoin. It took Metaplanet a whole year to get to 10,000 Bitcoin. And of course, they're accelerating. But when you're dealing with Bitcoin that only has 21 million, and that's always like the most basic thing. I hate to bring up 21 million, but it really is the most important thing. It sounds like a lot, but it's not. And when you have, I haven't even mentioned ETFs. I haven't even
A lot
mentioned
of action.
I haven't even mentioned the whole tariff thing and how the United States is sort of realizing that we don't want to be the global reserve currency anymore. We've always just received real products and services, real goods from around the world for the money that we just print. I think the general public is starting to catch on because they're realizing, wow, in the last 5 years, everything is way more expensive. And this inflation thing that they said was going to be transitory is still here. And I'm getting poorer and poorer. And the people who have assets are getting richer and richer. I think that suddenly moment has to be coming soon. I mean, I'm not going to say that it's coming this year or next year, but I think in the next 5 years that top just sort of breaks loose and we go to 1 million. And once we're at 1 million, I don't know who said this, but they were tweeting. They were saying, if it goes to 1 million, then why wouldn't it go to 2? If it goes to 2, then why wouldn't it go to 4? And I mean that makes sense to me. So I think the cycles are over. Long story short.
Yeah. I mean, I try to think about how many people know about Bitcoin, understand Bitcoin, appreciate Bitcoin, and then have bought Bitcoin, right? Those
Right.
4 things. But then you layer on top of it an equity like Strategy. But then you layer on top of that not just Strategy, the common stock equity, but the 3 preferreds. And the reason I bring it up is I think over 90% of the capital that was raised over the past week was from STRD, Stride, which has only been in existence for like a couple of weeks. So what does that say about, not to use the meme word accelerate, but if you have a product that Strategy literally created with AI, and now call it a month in, it's raising almost $1 billion a week, or at least it's shown that over the past week,
Mm.
to just buy, as you said, 10,000 Bitcoin, which is as much as MetaPlanet has total. I mean, doesn't that kind of, well, and let me layer this on. MetaPlanet has come out and publicly said they're targeting 1% of the Bitcoin supply, right? 210,000 Bitcoin. A few days ago, Alexander Lise was on a space that he publicly said they're targeting for the blockchain group 1% of the Bitcoin supply. Like, how many capital markets are there? Are we going to see one or several pop up in all these different global capital markets? And how many of them need to just target 1% of the Bitcoin supply before things kind of really, I mean, where do things go at that point? I mean, am I just kind of saying the same thing, or what's your take?
Yeah, there's only one way to go from there. And let's see, Strategy's at 3%. MetaPlanet wants to get to 1. The blockchain group wants to get to 1. There's 5. We only got 95 left. We have a certain percentage that are lost. We have a certain percentage that are locked up in ETFs. That's a few percent. So there's only one way to go from here, Tim. I mean, I hope your tie is extra long right now, because that's that's how I'm feeling. I mean, eventually the supply is going to catch up, and I'm surprised that we're still at 108,000. I mean, even that seems low to me. And I would love for all these companies to get to 1%, but the reality is they're not going to be able to. So the next best option is to just focus on having a healthy business, put as much capital as you can on a reoccurring basis into it, try to diversify whatever you have now in terms of assets into it, and just try to get as much as you can. I mean, people always ask me, Mason, should I be buying, like friends and family, should I be buying Bitcoin right now, even though it's 6 figures? And I'm saying, of course, because once it's 200, once it's 300, 4, then the amount that you're going to get for the dollars that are becoming infinitely worthless, if that even makes sense, are going to get you less Bitcoin. So luckily it's divisible by 100 million Satoshis, and you can buy as much as you want or as little as you want. And that's the great thing about Bitcoin, is if your strategy and you want to go all in and buy tens of billions in order to save your company from, as Saylor put it, dying a slow and miserable death. I really enjoyed his interview with Jordan Peterson. At this point, I try to only listen to Bitcoin content that is outside of my echo chamber, so I can hear the different perspective from someone like Jordan. And yeah, the only way we go is up from here, Tim.
Bullish.
Bullish.
So, can you walk us through how many different strategies there are? Meaning, you can just buy Bitcoin, put it on your balance sheet out of your cash flows, and just be a company with a Bitcoin treasury. You could also kind of do the MicroStrategy playbook and really engage the capital markets and be aggressive in the way that we've seen the MetaPlanets and the strategies do it. Are there other strategies other than those two? And is there an answer or like a potential explanation in the kind of more conservative approach of, hey, we're just going to put some Bitcoin on the balance sheet, we believe in it, but we're not going to be like really engaging the capital markets in an aggressive way? Is there an answer somewhere in those two categories or between the two when it comes to GameStop having billions of dollars in cash but only deploying 500 million so far? And I'm not trying to pick on GameStop, but more trying to come from a place of trying to understand what these different strategies are, and trying to just wrap my mind around what they're, right, like you're not going to figure out what someone's motives are if they're not willing to tell you publicly. But just that there are different strategies and there's not one size fits all necessarily. Is that a fair way to put it?
Yeah, definitely. I think it's all a matter of education and risk tolerance. I think there's an infinite amount of ways that you can slice a Bitcoin treasury strategy, whether it's 1% all the way up to 100%, depending on how healthy the business is. I mean, very rarely would an Acropolis client put 100% of their cash and assets into Bitcoin, but it really just depends. I mean, it seems like the golden rule in that the more that you learn about Bitcoin, the more that you really get deep into the weeds, understand why it was formed, how it works, what the future of the asset is, why it's, pulling capital from all these different markets and equities and bonds and real estate and other currencies and gold and art and collectibles. The more you learn, the more educated you become, the more that you want to buy Bitcoin, the more you want to be allocated. And you can really see it in the sense of urgency. Some of the clients that come to us, they want to have allocated like yesterday. They're really worried about, am I going to miss it? Am I going to miss it? And that just shows you how much they know about it. We have some clients that are more conservative. They say, hey, an advisor of mine told me to look into it. I've been hearing about it on CNBC. But ultimately, the more educated they become, the more allocation they want. And we're really lucky to have our chief investment officer, Glenn Cameron. He's got 30 years of finance experience, CPAs, worked with pensions, and been an investment consultant, was actually responsible for the first pension fund out of the UK to get a Bitcoin allocation. So he sits with our clients and really comes up with on a case-by-case basis how we can acquire as much Bitcoin as we can, or how we can sort of get as much juice out of the squeeze. And again, while still remaining conservative, still remaining safe, whether that's you have a business that makes $5 million a month and it's as guaranteed as it could be because they're contracts or they're relationships that you've had for a decade plus, or if you're sitting on a capital asset like a building that's worth $100 million and you want to figure out how you can pull out 10 or 20 or 30 million and put that into Bitcoin for a long-term treasury asset. It really is like there's an infinite amount of possibilities. I mean, we work with smaller private businesses, public businesses, businesses that are extremely, extremely orange pilled to just slightly. So it really depends. I mean, and also different structures, LLCs, corporates. We have clients that have different businesses and different Bitcoin holdings under the different businesses, and they're trying to just get as much value as they can over the next decade because they see this as the Bitcoin gold rush. But yeah, it's the answer is there's an infinite number of possibilities.
Can you share what the rough range is of allocation of cash to Bitcoin for clients? Is it like all the way down from like just a couple basis points all the way up to over 50%? Or obviously I'm just grabbing numbers out of thin air.
Yeah, it really is all the way. I would say as low as 1% to as high as 70% if it's a very well capitalized business that doesn't have a lot of debt, is in a good position, like I said, to be safe. But again, and we really, really like to emphasize this because there's going to be companies that blow up along the way because they get over levered. They're forced sellers at the bottom. And I really want to make this clear that this is an issue of education and position sizing and risk and over leveraging rather than a Bitcoin issue. And yeah, so it's everywhere from 1% to as high as 75%.
Have you had any conversations or questions leading to conversations from clients or prospects around the communications and more so media side of it? Because I know that you mentioned like employee relations, but there's kind of this joke right now that every Bitcoin treasury company needs like two people, one to shill whatever's going on, and the other one to like check on the keys every 6 months. And of course, that's probably not entirely accurate, but like, what's your take on like the opportunity here, right? Because people probably are looking for opportunities, looking for jobs in the space. Um, and companies are probably trying to figure out how, especially if they're a public company, right, how to message out. And one quick anecdote, yeah, I was on a call maybe a few months ago with a private company, and I said, if I can be helpful on the media side, let me know. And they're like, oh, we're not in a place yet where we want to be public about this at all, right? We're a small private company. We just don't want to rock the boat. We love Bitcoin. We're stacking Bitcoin, but we don't even want to message that publicly yet. So like what's the range of all of this, and what have any conversations been like at Acropolis around that?
That's also the range that we see internally, but the position that we like to take, if they do want to go external, they do want to, a steak and shake is a good example, in that they've gone very public. They're accepting Bitcoin at all of their locations, and they're trying to, they were at the conference. They're really trying to engage within the community in order to drive more sales, have more brand recognition, and sort of like ride the Bitcoin treasury wave. But the advice that we always give is you need to put your money where your mouth is, for lack of a better word, and you need to actually be invested in the ideals of Bitcoin, and not just doing it for a quick press release, and not just doing it so you can take the Bitcoin and immediately convert it into dollars, because Bitcoiners are often very intelligent, and they can sniff out a affinity scammer or a grifter just trying to do it for publicity, which is not a position that you want to be in. And we mentioned GameStop, and they sort of didn't go about this the right way, in my opinion. We are not working with GameStop. Full transparency. I wish we were, because we would have told them not to. We saw the clip with Cohen, and he was like, "Yeah, if this Bitcoin thing is right, then we'll be happy because we have some Bitcoin." And they're very inconspicuous about what the other dollars that they've raised are being used for, and they're paying the price right now because GameStop is being punished, because everyone sort of assumed that they were going to go all in, and they were going to really be orange pilled and really understand the value proposition of Bitcoin and what it is, more than just doing it for a headline. So we always preach, if you're going to publicly talk about Bitcoin, if you're going to do the podcast route, if you're going to, we're happy to have you on our show, happy to introduce you to guys like Tim and have you on his show. But if you're going to do it, it has to be legitimate. It has to be, coming from the heart, which it sounds like it's, like woo woo, but really Bitcoiners can sniff this out from a mile away. And it's important also, not just from a public standpoint, but from an internal standpoint as well, because not everyone at your company is going to understand Bitcoin. It's almost a guarantee that you're going to have employees and executives that go, "Hey, whoa. Are we sure?" They're going to think, because you have to think about it from their perspective. They work and they rely on your company to make a living, most likely. And if they're scared that the company is, investing in an internet token that they don't really know anything about, but they've heard it's bad for the environment and only used for criminals, and going to be banned one day, then you have to take preemptive steps to educate them and say, "Hey, this is not a gamble. This is not our company going to Vegas and playing blackjack. This is us actually trying to ensure that we don't have to lay you off one day, trying to ensure that we don't have to constantly spin our wheels and figure out how to grow and go and acquire companies that will more than likely end up failing for, if it's not a culture fit, or if it's not a technical fit, or, for several reasons." You have to you have to educate your internal team. So we help with that as well. We present to executives, we present to broader teams. If we can get everyone in one Zoom meeting and sort of explain the basics of Bitcoin and why it's actually something that you should be advocating for as an employee. And then last thing I'll say on this topic is we don't have a lot of clients doing it right now, but we do offer the ability, we call it restricted Bitcoin units, to allow your employees to have a Bitcoin incentive plan. So instead of RSUs, giving your employees a certain amount of stock in order to stay for a certain period of time, the idea is you would give them a Bitcoin balance and say, if you stay for example, if you stay for 4 years, then this Bitcoin is going to belong to you, which is beneficial for a lot of reasons. It's beneficial if it's a publicly traded company and the stock doesn't perform so well and it's mostly just going down. Employees don't love that. If it's a private company and it's not actually listed on any exchange, unless you sell to a private party, it's not a liquid asset. There's other tax things that you have to think about in that scenario as well. And then the company is having to constantly issue new shares and dilute itself in order to attract talent. And let's say an employee stays for 4 years, then that's great. You got the employee for 4 years, they get their Bitcoin, they can sell it, they can keep it. It's much better than an RSU. And then from the company's perspective, if the employee ends up leaving, then they just get to keep the Bitcoin that they would have given to them. So it's an interesting product that, like I said, we're not doing it with too many companies right now, but I think in the future, that is where most employee incentive programs will move. They will move to Bitcoin because Bitcoin is always liquid. Bitcoin is acceptable everywhere. You're not needing to wait to be acquired or to be publicly listed. And it's a great incentive. It's a great incentive to get an employee to stay.
No, I love that. And it's one of those things where you kind of wonder, do business owners, even if they are Bitcoiners, are they even aware that these things exist? Which is where hopefully it's helpful to have these conversations. Okay. What are some of the most common questions or hesitations from clients kind of ahead of them pulling the trigger? Like they're either a Bitcoiner or like they want to kind of move forward with the strategy, but what are their trip points? What are they getting hung up on along the way?
Probably the
often?
most common one is one of the most basic ones, and it's just why Bitcoin and not everything else. Because this idea of a diversified basket of assets is something that's deeply ingrained in society. You pretty much see it everywhere. It's always, got to diversify. Don't put all your eggs in one basket. And we're here telling you not to diversify and to put all your eggs into this Bitcoin basket. The more important basket to worry about not putting all your eggs into is the custody solution. So you don't want to be leaving all of your Bitcoin with an exchange. So we definitely take that approach. Yeah, we get a lot of questions about why just Bitcoin, what makes Bitcoin different. A lot of questions on quantum computing. That seems to be a pretty common question. People think, well, I heard that, once quantum computing comes out, then Bitcoin is done for. So is that something that we should be thinking about? And maybe we can just talk about it here. I think quantum computing is not a threat to Bitcoin. There are people like Adam Back that answer this question much better than I can, by the way. So I'm sort of just parroting a lot of what people like Adam say. But quantum computing is still a long ways away in terms of actually becoming a threat. And then if you think about the things that are threatened by quantum computing, essentially everything else on Earth will be hacked before Bitcoin is hacked. And Bitcoin is built in a way that if there is a existential threat to the protocol, then it can be changed. It can be upgraded. So once quantum actually becomes a threat, it's actually starting to crack other systems, then the Bitcoin network will come together and say, hey, we need to change the hashing algorithm or the way that the protocol works in a minor way in order to be quantum resistant. And then they will implement that new quantum resistant hashing function. And again, I'm not technical, so I'm not explaining this in the perfect way. And then the protocol will upgrade. Everyone will agree that this is necessary for Bitcoin to continue. And then there will be quantum resistant Bitcoin and we can all move on. It's something that the media likes to talk about a lot, especially with AI, and we are definitely accelerating in terms of technological advancement. And I'm glad that people are thinking about it, but in reality, it's not a threat to Bitcoin in the near term. And even if it was, then we can upgrade the protocol and make it quantum resistant.
Got it. I think that's a great kind of every person overview, because there's just different audiences, right? Like, someone might be a huge fan of Broken Money by Lynn Alden, but it's a pretty thick book, right? And then someone else might be a big fan of The Big Print by Larry Lepard, right? More kind of approachable. I've had friends of mine say they've given it to their mom and she like really enjoyed it. Not that moms can't enjoy Broken Money by Lynn Alden, but just different audiences, right? People, whether it's the depth of the book or the approach, right? I mean, I love to read books, but don't often actually read the pages because I'm more of a visual auditory learner. So I guess lots of good ebooks out there as well. But
I forgot to mention the other question. This is probably the second most common, is the volatility.
okay.
The volatility scares the hell out of people. They just, the United States Federal Reserve and central banks around the world have done everything they can to remove volatility from our lives. They want things to be smooth sailing at all times. Things get hot, they try to bring it down. Things get cold, they try to bring it up. And they see that, yes, Bitcoin is volatile. It goes from 20 to 70 and back down to 15. It goes, to over 100 and then down to 75 and now back over 100 again. But at the end of the day, again, this is just more of an issue of education. Because if you can see that over any 4-year period, anyone who's held Bitcoin is in the green, that the volatility is more an issue of position sizing rather than the asset itself. The notion that a bubble is something that goes up very high and then pops and goes down below where it was and never goes back up, where Bitcoin is sort of this swing and it goes down and then settles higher and then goes up and then goes down and then settles higher. So it's fundamentally not a bubble, and the volatility is more towards the upside than it is the downside. So would you rather hold on to the stable US dollar that loses value ever increasingly quickly? Or do you want to hold capital as much as you can into this asset that is volatile in the short term, but over the long term, there's way more to the upside? So volatility is another thing. And that's, again, where we come into play and we say, look, we understand that that's a major concern, which is why we try to prevent you from being a forced seller at the bottom, from getting in over your skis, doing too much. So yeah, volatility is another thing that we deal with a lot, and we deal with it so much that we actually put together a Bitcoin misconceptions playbook of the most common misconceptions that we get that we can just send to clients. It's I'm looking at it here. So it's the most common misconceptions. These are not what I believe, but what we wrote to essentially debunk. Bitcoin has no use case. Bitcoin is too volatile. Bitcoin is backed by nothing. You can't touch it, so Bitcoin is not real. I'm too late to Bitcoin, and Bitcoin is bad for the environment. Those are the most common misconceptions. And yeah, if anyone wants to check out that playbook, you just go to acropolistreasury.com/playbooks. But yeah, and this is all, and again, I want to make it clear, we're not shaming anyone. Where, everyone was a beginner at one point. Everyone didn't understand these things, and we are more than patient and more than happy to help explain internally and externally, because again, at the end of the day,